Welcome, everyone, to our Long Verticals and Diagonals webcast. I'm Connie Hill, Senior Manager and Education Coach. You know, sometimes we have traditions, whether that's traditions with your family or friends, and sometimes it's kind of difficult to not do something that's traditional. Well, today we're going to look at something that's not as traditional as far as a particular trade goes. We're going to do an interesting trade with a diagonal that I'm going to say is not traditional. It's a little bit less common. All right. Happy to see each of you here. It's always fun to see those familiar faces. And Will always gives me this great yellow scooter, which is just awesome because he knows I have a little Vespa. He doesn't know that it's not yellow, but I think that's the only color choice of the scooters you've got in there. I am joined in the chat by Brett Crowther. Brett and I have known each other for years and years, great veteran of the markets. In fact, I could say some of the neat things I've learned about the markets, I could say have come from Brett. In any case, he's here to help maybe fill some questions I can't quite get to. So I'm happy that he is here. I'll keep my eye on the chat. As you have questions, send them in, right? We want to make sure you get your questions answered. And if you're listening to this on the recording, like I know a lot of you do, when you have questions, you write your questions in the comment section of YouTube, because we go back and review those throughout the day and get your questions answered as well. So feel free to use that. All right. I hope you're following us on X. I'm Connie Hill, CS. Brett is Brett Crowther, CS, with 2 T's. And we'll post educational content, things we're noticing about the markets, things that might be going on. We like to just throw out those little nuggets to you as the day progresses. All right, let's go through our disclosures and get down to business. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes. Don't consider it a recommendation. We'll be using the paper money software application. It's for educational purposes only. It is not perfect, and it's not a perfect emulation of what happens in the live market, but it's a pretty good representation. We're going to talk about an exception that happened on one of our trades here today. Past performance of any security or strategy does not guarantee financial success or results. All right, we're going to do a quick announcement. We're going to talk a little bit about conceptually verticals, long verticals, and diagonals. In some ways, they're similar, and in some ways, they're a little bit different from each other. Whenever we're talking about these trades, we like to incorporate, where it's appropriate, information about what's going on with the price, time, and volatility. Those are the 3 main things that really influence option trades. And of course, we're going to be looking at a lot of examples following up on some of our previous trades here as well. The announcement, we've got more than 3 upcoming events, but these are the ones that are the most coming up as far as fresh on the docket, with the exception of this weekend, which is in California. But then we'll have June 5th and 6th in San Diego, 17th and 18th of July in Chicago, and those will both be option strategies and technical analysis events. So 2 days. You don't have to be there for both days, but if you can be, fantastic. And then we have the Market Drive event in Dallas. That's going to take place on August 1st. So we'd love to see you there. They're free to you, of course. We treat you like royalty. We feed you, and I'll pay for your parking, all sorts of things. So if you can go, please attend. You will be happy that you did so. Now, as far as just talking about long verticals and diagonals in this strategy, because those are the only 2 strategies we really focus on here. Some of you may be a little bit newer to maybe what some of these trades are and how they might be different. On the long vertical, and actually in both, we're buying a long option and we're selling an option short against it. And the difference between the 2 primarily is that in the long vertical, we're doing the same expiration cycle, right? Whatever the weekly is or the monthly is, that's the one where both legs are going to be that way. On the diagonals, it's different because one of the dates is going to have a different expiration cycle than the other, okay? And this is, we'll get into a little bit of that non-traditional way to do a vertical when we get to our example trades here. Typically, on a long call diagonal, the long call and the short call of a higher strike price with that different expiration cycle, but typically we'll go out a little bit further for the long leg. Okay, it doesn't have to be this way, but typically that's what it is. And it's the shorter time frame that is the short leg, is how that typically is going to work. Well, let's take a look at a couple of our previous trades we need to follow up on. We had kind of a busy week last week, and then we'll get into some of our new opportunities, one of which I mentioned is not going to be traditional. All right, let's head on over to Thinkorswim. Over here on this left-hand side are a watch list here called Liquid Options that we ran a search together here May 7th. And so these are the stocks that came back in that scan that we created. And our plan is to use that watch list for the next few weeks. Okay, we'll update it once in a while, but we want to have a go-to watch list, whether it's for bullish opportunities or bearish opportunities. Okay, so basically we're saying pretty much all of these should have liquidity. There should not be issues with it not having enough open interest and options and things of that nature. Now it looks like the SPX, we've formed another little new high. I shouldn't say we have, it formed a new high here today, 75.56. Looks like what the high is today. It looks like it's pretty close to still being at that high. Let's take a look at our NASDAQ. NASDAQ cleared 30,000 and just, keeps grinding a little bit higher now, a little bit past that 30,000 mark up to 30,169. So it's still grinding away. The Russell 2000 tracks our small cap stocks. We don't maybe look at it as often in this class simply because a lot of the stocks that we're interested in trading in these strategies, we want lots of liquidity. And many times small cap stocks just don't have that liquidity. Okay. And then the Dow Jones. But I should mention the Russell put in a new high yesterday. There comes our Dow Jones. It looks like the Dow Jones put in a new high yesterday. It's off its lows. It was down lower a little bit earlier this morning. And it looks like the bulls have pushed it right back up. All right. So we have an idea. Basically, the markets are still being a little bit more bullish overall. And so for us, we're probably going to be looking at taking on more bullish trades than bearish trades. Now let's take a look at a couple of trades from the past week. First trade we're going to look at, we did not have in there for very long, Cipher Digital. On Cipher Digital, we did a long call vertical in which we were in and out of the trade pretty quick. Here we were last Thursday where I have that giant circle. And if I recall correctly, the place on the candlestick was not up to its height that we're seeing there when it closed. It had a decent size, but it still had some growth after it. And so that day it took off, the next day, and then the third day that we're in the trade, where the yellow is, that's where we automatically got out because we had a working order sitting in there. Last week we said, hey, if we get 50% of our max profit, we're going to be happy campers. We're going to move on. In this case, it hit that pretty quickly here. We can see here we got into our debit trade for 38 cents. We said we'd be happy if we could get 71 cents out of it. It went ahead and filled us for 75 cents. So that was a 37 cent gain, which is 37 bucks per contract. We had 20 contracts out there. So that gave us a return of about 740 and a 97% return in the course of about 3 trading days. So we put it on Thursday, and then when we were back in the markets after the Monday Memorial Day on Tuesday, that's when it executed the trade for us. So, all right, in and out, we're pretty happy. We love being able to just see these churned out, okay? Bogus says, what was the liquid option scan from a previous long verticals and diagonals presentation? Yes, it was. In fact, the day that we did it, and I usually mark our options list with a date on it. So it was Not the one from April, but it was this one right here. So May 7th is when we had that class. And I taught you that little scan, basically looking in the S&P 500 and the NASDAQ 100 for those really liquid stocks that hopefully have a lot of trading activity. So then we'll know that they're fairly close there. Now, Stay Always says you're still in CIFR because it has not hit your target. Okay, that's fine because we took a fairly early target on this, right? We said if we get 50%, we'll be happy campers. And you can see it's continued to perform. Yesterday, it had a nice day. Looks like it's go back just a little bit here today. All right, another trade that we did here was Micron. And if you've been paying attention to the news, you know, Micron had a massive day on Tuesday. We were into the trade right here. That was last Thursday. And we ended up getting stopped out the next, actually that very same day. So let me show you what the orders look like. We ended up being profitable on it, but this is where Thinkorswim's paper money is not perfect, okay? So we come over here to the monitor tab. We've got our Micron up here. You can see we got into this long call vertical for a 235 debit. And we put on a stop and a target. So we put on a stop at roughly, this is gauging it here, about 119 is when we had a stop loss set for. And then our 50% of the max gain would have said, okay, create and send out a limit order for 369, get us out of the trade. Well, you're going to see here that it is the stop that actually filled here. Again, paper money isn't perfect because we got filled here at 285. Okay. So in reality, we were in the trade for about, I don't know, 6 hours, not more than 6 hours. And it was not a big gain here. In a live market, I don't know that that would have happened, right? Saying, hey, stop us out if it gets to around 119, but then filling us at 285, that's even better than what we got filled at. So this is, I think, one of the things that sometimes happens in paper money. You can't get too upset about it, right? But maybe it didn't act exactly as the markets would act. In any case, we made some money on a 6-hour trade. We made $400 pretty quickly there because we had 8 contracts, and that was just about a 21% return. Now, it could have gone further. However, I would have anticipated it would have hit its target back here on Tuesday when it had gapped up and had that really big day. All right. Let's see. J. Richardson says, Connie, was it a paper money fill if Stay Gold Always live target wasn't hit? So yeah, I think what you're saying there, Jay Richardson, is it didn't actually hit our target, even though it filled us. Yeah, I think that's what you're saying there. Very good. All right, so those were our 2 main trades from last week. We got one that's still working. The one that's still working, because we were focusing on long verticals last week, the one that's still kind of in process is BE, Bloom Energy. So again, we got in there on last Thursday. And since then, what has it done? It has pulled back on us. Now, I'm just going to kind of move this a little bit because I want you to see this is where our target is up here. Now, the question is, well, should we really be in the trade if it's gone against us 4 days in a row? With verticals, it gives you the ability to really weather and have a buffer on your trade if it doesn't go that way automatically. I mean, we love it if it does, right? We were happy about, you know, especially about that cipher trade that just took off for us, but it's really not back that far. When I look at this green moving average, that's just a 10-day moving average. So it's kind of looking like it's trying to bounce off its 10-day right now. So we are down on the trade a little bit. Let's take a look at it. And it's right here, BE. So we're down $130, although it has recovered some here today. How much time do we have left? Well, we've got 3 weeks. So we're not overly concerned about it. We're going to let it work. And we do have that stop and our target in place. So if it does go low enough to hit our stop, we'll be out of the trade. But I think it's picking back up here again this morning. All right. Let's talk about Walmart. Walmart, we had a trade on last week. And we had to decide if we were going to, our intent on that trade was actually that we bought a leap on it. And our intent was to stay in the trade for a really long time. Walmart came out with earnings and pretty much had their worst day that they'd had in like 3 years, right? Huge gap down. And the date it gapped down was actually the date of our class. I believe it was on the 21st there. And so the decision was made at that time that we were not going to close out of the trade. However, I didn't fault anybody that said, you know, it's met my rules for getting out. I don't want to be in it. Even though we were thinking long term, it broke through some recent support here. So, and it was down like what, 10%. About the time when we were in our class, it was down about 10%. And you can see it's continued to drop since then. Sometimes when news comes out and it's really reactive that way, and you're already at a scenario where you're kind of like, let's just see if we can find a better exit point. That's kind of where we were with Walmart. If it would have rebounded over the next day or two, that would have been great, but it didn't. So we just made the decision to cut our loss, get out of there. Walmart trade right now was not going to be working out. Now, actually what they said is kind of describing a weak consumer, but honestly, Walmart does pretty good with the weak, with consumers that maybe don't have a ton of money right now. Inflation's pinching people. That's actually when Walmart shines really well. So I wouldn't be surprised if it were to pick back up. And then maybe if it met a criteria that it really has reversed, maybe consider getting back in. However, we got out on this day. Okay, so I let it go a couple more days. So this was Tuesday. Tuesday, it wasn't rebounding. It was starting to pull back. I was like, okay, we're not going to find a better exit point. Might as well just get out right now. All right. Jay Richardson, I don't like putting on a new trade prior to earnings if we can see it coming up. And that is a preference that some people will have, right? You may, and that may be part of your criteria. I don't want to see any earnings in the next 10 days or something, right? And or you may pass on it. Now, one of our trades we're going to look at is going to have an earnings report. So we'll talk about that, but we could be out before then. Jugator says, didn't we have a Microsoft diagonal going on? Can we discuss the Microsoft? Let me just take a quick look at my notes about what we did with Microsoft last week. We rolled, did we? We rolled it last week. We rolled the short option. And let's see here on Microsoft. Let's take a look at it. Microsoft, we have this longer dated out in July option. We've had this for a few weeks and we have sold calls against it. Last week, we had a call that was ready to roll, so we rolled it. However, in this case, we're actually in the money on it, okay? What happened during the week is, and we can go to the account statement here. During the week, we were able to buy it back for super cheap, and so we sold another one. Okay, so on Tuesday, the 135 call that we sold for 221 was trading at 2 cents. Now our plan was typically to just roll when we get to our class, but it was Tuesday. I was like, well, let's go ahead and roll it now. So we rolled it, got out of it, and we got into now a 121 call for May 29th, which will be this Friday. Let's see, is that right? That's what that one was. And now, let's see here. I think this is the same day. This was the 21st, Tuesday. 26 was Tuesday. 21st was Thursday. 26 was Tuesday. I should have taken better notes here. But basically, we took a roll while we weren't together in our class. And that one looks like we got out at 58 cents and sold another for 9.20, and that's the one that we're in right now. Let's see if that's right. This is showing our short leg. That actually, that's not quite right, is it? What I said, this might have been another trade in a different class, okay? So we're going to have to go off of what we have in the activity and positions here. So right now we're short the 420 call. We still have 8 days before it expires. It's going against us a little bit because why? Well, the stock must be moving up. Our long leg we bought for 17.35 is worth 14 and change now. So we're down on that side of the trade a little bit as well. Let's take a look at the chart. If we are on this one, our long leg, this is where we got in initially on May 7th, okay? It has kind of been going a little bit sideways. Today, it's really ramping up. So that is helping the long call, the longer dated option, but it is hurting the short call. And I made a little mark here that we rolled it again yesterday, okay? What do we have coming up? Tomorrow's Friday, then we have a weekend. If Microsoft just kind of stays a little bit sideways this way, like it is, we may start seeing some time decay. We might start seeing that theta work to our favor of the short option. However, recognize that it is in the money. Paper money will not assign early. And a live market, we are in a scenario, it could assign us early because we're in the money on it. Now, we've got a lot of open interest on it. We come back here. Microsoft options are super liquid. So our contract's one of 3,300-ish contracts out there. It doesn't mean that we're safe from not being assigned. It just means we're in a big pool. We may be assigned, we might not be assigned, but again, paper money doesn't do that. So we could do one of two things. We could roll this one, which was actually not necessarily my intent today. But if somebody wanted to and say, I don't want to be in the money, yeah, we certainly could roll it out. We could even roll it out and stay in our same time frame. Okay, we could stay in these June 5s, which gives us 8 days to be in the trade. And if you were a little bit more comfortable, a little bit further out of the money, we could roll that. We're going to have to take a loss on it. Okay, we're going to be kind of locking in a little bit of a loss, which is not always a bad thing. And sometimes that's the right thing to do. So if you were somebody that said, you know, really, I'm a lot more comfortable if my delta that I'm short is out in the 30s or the 40s, you might say, let's roll. For that argument, let's go ahead and roll it. Okay, just for that argument alone. But let's stay in the June 5s and let's maybe roll out here to say something a little bit out of the money. Say we do this 430 strike price, has lots of open interest in here as well. Let's go ahead and roll out of it. So we're going to go pick the 430. So how are we going to do this? Do a right mouse click, and we're going to say create rolling order. And we're going to grab that short leg. Here's our June. Let's see here. Our June 8th is, let's see. Let me bring this up here. Okay, this just kept our call as the same one. Okay, so here is our June 5. We're buying back. We're not going to go to June 8th. We're actually going to stay in the same period, but we're going to be a different strike price, which actually kind of is going to turn it in if we choose the same strike price, a calendar. But we're going to go out here to, we said 430. Okay, so that's the one we're going to sell now, is 430. And we're going to be seeing a debit on it. Okay, so this is going to basically be locking in the essentially a $5 loss on this short call, but we're getting back into selling something out of the money where we're a little bit more comfortable. Okay. And we're going to keep it the same. And it's actually not a calendar because it would have to be the same strike price. But this actually turns it into what? A long vertical. Well, that's not true. This looks like it's a long vertical, but it's not because our longer leg is dated out in August, right? That's our date in August. Trying to kind of blow it up here so we could see. July 17th. I was thinking August, but it's really July 17th. Okay. So now we will be short the 430. We're going to be buying back our 420. All right. We're going to lock this in and hopefully we'll get filled here pretty quickly. All right. So a little bit confusing there on that. Apologize. But we've got the right thing set up here. All right. New trades. You know, sometimes it's helpful to follow our traditions, meaning a traditional way a trade might be set up. You know, we've had some success in our class with some of these long verticals. And so we're just going to do a wash, rinse, and repeat. We're just going to say, let's put on another one. In fact, we're going to put on a couple of here we're going to take a look at. First one we're going to take a look at is CRWD CrowdStrike. All right. CrowdStrike has just been on a big old roll, hasn't it? If I were drawing in a flagpole here, I might draw it at something like this, several days of it just running up with just tiny little blips here. Has a little 2-day pullback. Now, 2 to 5 days is ideal on a flag. And looks like it's bouncing out of that flag pattern today. Now, we could, if we wanted, use this flagpole and use it as our gauge of what the next potential target might be, which when trading flags, some people might decide to do that. So let's do this. Let's duplicate the drawing. Let's see how long this might be now. We're going to put this right at the breakout zone. We could put it at the breakout zone, or actually, let's be a little more conservative. Let's bring it back here to the edge of our flag. And that can be a second way you place it. That's giving us a target out there of 823. 823, my goodness, we're only sitting at 664 right now. Okay. However, if somebody wanted to be real aggressive using that as a target, they might buy the appropriate amount of time and try to make this play, try to wait it out, see if it happens. We're not going to be quite that aggressive in our trade here today. This is what we're going to do. Let's go to the trade tab here. Now, if we did want to maybe try to hit that target way out there, we might come out to maybe say like a July 17 with 50 days worth of time. We might go out that far and see if it can't make it, and we could put in some aggressive targets. And if somebody wanted to trade it that way, that would be just fine. We are going to be using a little bit shorter term option. We're going to use the June 18s, and we're not going to go for that big move, although somebody could if they wanted to. And if somebody wanted to compare, they could do the trade that we're going to do now and put on a trade July 17 and just kind of compare, gee, did it actually get all the way out there to that big target or not? We're going to be a little bit more conservative here. All right, currently the stock is about 665 is going to be our at the money option here. And these are expensive options, and some of them have good open interest and some of them not as much. So we're going to want to avoid these strikes that don't have a lot of open interest, right? 48 contracts, 62 contracts, 42. We're going to probably stick in the ones that have the $10 increments, which means we're probably not going to use that 665 because the interest is too low. The trade I was considering putting together here was going to be on the 650, 660, but it's moved so much. So let's go 660, 670. Change this one to 670. And let's see what that looks like. So it's a $10 white spread. More open interest here, kind of avoiding that 655 there. If somebody were maybe just doing like one contract, they may do it, but it just feels more comfortable having a lot more contracts to be able to exchange with and to be able to get in and out of the trade more easily. This is the one that does have earnings next week. Trade now says, is or actually it was John says, any concerns with earnings next week? The earnings are going to be on June 3rd. And so that is a week from tomorrow. I mean, a week from yesterday. Okay, so it'll be a week from Wednesday. Some of our trades have hit their targets pretty quickly before the earnings came along. We're going to put a note on this that we'll try to get out before that earning. I shouldn't say try to get out. We'll get out before the earnings date comes along, whether we're doing well in the trade or not. We'll just say, let's go ahead and get out. But it could hit our target before we even get there, okay, before we get to that date. All right, this price is jumping around a little bit. I'm going to hit the lock. I'm going to put it back where it was just a second ago at 445, okay? So we'd be risking 445 to make what? Well, 10 minus 445 would be what? 655. Is that right? 10 minus 455. I think that's going to be right. Now I know that was moving around at one point here. It was almost up to $5, so it'd be looking like risking $5 to make $5. We'll keep it at that 445 from the 10. And so 555 is what we have to gain on it. I said 6, it's really 5. Gives us more to gain than what we're risking. That can be helpful in a trade. So we can, in our class, risk up to $2,000 a trade. Well, at $2,000 a trade, how many contracts are we going to be able to do? We're going to be able to do 4. Can't really do 4.5, but we can do 4 contracts here. So let's put in our 4 contracts. And then let's put in an order to buy it back if we get a chunk of the gain that we're interested in. So we'll put in a first trigger sequential. We'll put in an opposite order. What percentage are you satisfied? I do want you to chat this answer in. We'll see kind of what your answers are and take the most popular answer, okay? What percentage gain are you happy to take profits? You happy to take profits at 50%, which is what we did last week, 60%, 65, 70, 75, 80. You throw out what number you're comfortable with. And on this one, we're going to have the majority rule because sometimes I run the class that way. All right. Yeah, Chris, let me know it's 555 on that one. 50%, 50%, 50%. Look at this, 4 50%ers in a row. Okay, you guys win. We're going to take 50% of the profit, be happy campers, move on with the trade. Hopefully it'll turn out similar to some of those trades we've had in the last few weeks. All right, if 555 is our max theoretical gain, and we're saying we're going for half of it, let's multiply that by 50%. That gives us the value of 277. So let's add 277 to our 445. There we go. It says, okay, let's put in an order to get out at 722. We're not going to try to milk it for everything that it's worth. And we know that earnings is coming up. If somebody wanted to play through earnings, they might have gone out to that July option and maybe had a different target. In this case, we're going to say, hey, if we get just a nice little bit of the move, 50% of it, let's take the money, let's get out, maybe let earnings pass by. Hopefully it'll get out at that point. Let's go ahead and put this good till canceled. And we're going to send this on its way. And hopefully it'll continue to be one of our bread and butter trades, right? All right, Ricebird said 60 to 75%. Now, Randall, you have 73.5. Interesting percent. Okay, the 50%ers got in here the quickest, so we went with the 50%, but maybe I'll use one of yours for our next trade. The other one I want to look at here is, and again, this came off of our liquid options list, as did CrowdStrike. This one is now, and we're going to go through this one fairly quickly. ServiceNow, let's maybe kind of see the last 6 months. I'm going to back up here. You can see that it had been a little bit of a downtrend. Finally, kind of had maybe a double, triple bottom look here. Finally started to reverse. So now it's above our 50 period moving average, the 30, is the red line. It's above our 30-period moving average, and the green line is our 10. So it's above those short to intermediate moving averages, which some traders like to see that. If a stock's reversing, to maybe say, is it reversed enough that they feel comfortable going with the shorter term trend versus the intermediate trend? Okay, so that's why I wanted you to see that. Right now, earlier today, it ran up this high when I was looking at it initially, and it was looking like a really nice breakout. Okay, so some people might like this for a breakout. I wouldn't really call it a hold because to me, this is a lot of sideways action. And so to me, this is looking more like it's breaking out of this short-term range here. So we're going to use it as an entry here. Let's go to our trade tab. Again, we could go out further in time. This one doesn't have earnings in the way, so I wanted to get back. It already had its earnings back here. And so if you felt comfortable going out to some of these weeklies and there was enough open interest, say like 35, you could do that, but make sure you've got the open interest. Really, it's in this monthly, and this has a 21-day window before they expire, and many times traders will use timeframes 20 to 40 as far as what they're interested in using for a vertical. So we're going to use this on the short end of things, but this is a little bit interesting here. Let's see. Oh, good. Our CrowdStrike just got filled. 106.2. I was initially looking at 105 to 110. 105 is right there. And it has a lot of open interest. Now, 337 isn't bad. I wouldn't be afraid of 337. Let's maybe go 108 is going to be our out the money. Let's go 108, 110, see what that looks like. See if it looks good enough. When I was experimenting earlier, I was doing 105, 110, but I think this is going to give us a little bit better dynamic here, having a $2 wide spread. So if you're in an account where you can only risk $100 per trade, this can be helpful to only be risking 85 cents. So we'd be risking 85 cents to make 115. And we're not in a big rush for it. We don't have earnings coming up, but we still want to be pretty prudent with things. Now, if we can risk $2,000 per trade, how many contracts can we do here? $2,000, divide that by our $85, we could do 23 contracts. So if you're doing a lot of contracts, I'm going to say, 15, 20 is a lot of contracts, then you want to make sure that you're really using some liquid options, which we're going to be doing here. There's over 2,000, over 13,000 here. Okay, so that puts it in pretty good shape with liquidity. So 23 contracts here. Let's change our number. And let's do our buyback order. First trigger sequential. Get that guy first. First trigger sequential, and then we'll do our opposite order. How much should we buy it back for? All right, I said I might use some of the other ones that came in here that weren't 50%. We'd have 60, a 75. The 73.50, Randall, has a little bit of a ring to it. So we'll go with 73.50. Okay, if we get 73.50 of our 115, let's see, 0.735, that's going to be about 84 cents. So we're going to add 84 cents to our already existing 85 cents. And we're saying, all right, we'll be happy to get out when the spread here is 169. We're not trying to milk it for everything it's worth. Oops, that would be a little too big. All right, 169. I'm going to make this good till canceled. Make sure the quantities are the same amount, and they are. We're going to put this in our dynamic diagonals along verticals class bucket. Now I want to get to our trade that's non-traditional, okay? So we've got two bread and butter trades on those long verticals. Many times in a long diagonal, we're not looking for as big of a move. Okay. Kind of diagonal we're going to do today is not traditional. Okay. Today, I want you to put on your brain and think about, today we're selling puts. Today we want to look for put premium. Okay. And so stock we're going to use here is Pan W. We're going to use a stock that is bullish. Get the A in there, Pan W. It's been on a big run, kind of went sideways here for a little bit, ran up, has a little bit of a 2-day pullback. Today looks like a close above the high of the low day, or at least a trade above the high of the low day. And some people like to use that as an entry. Now, on this particular one, I want you to think about this diagonal as non-traditional. We're going to buy a longer dated option with the intent of selling a lot of put premium against it, and that long leg is our kind of our buffer. It's our hedge leg. Yeah, on it, we're not really intending for it to go up and make money. We're just using it as a hedge. Our intent is to have all the puts that I'm hoping to sell in the future, week by week. That's where we're hoping to make our money. We did this with AMD earlier. I think we started AMD in March, and we did that. We just sold premium after premium after premium. Again, not traditional. So I want to make you aware of that. Let's go out here. I want to decide on our longer dated option here first. And I want to go out to, let's go out to August 21. And on August 21, I was looking at going out to a 30 or 40 something delta on it. Okay. Let's go ahead and take, let's take this 250, which is a 40 delta. Okay. So we're going to go long 250 in August. So I'm just going to make a little note here in our notes. 250. 250 is the 40 delta. All right. Now our short leg. This has those nice weeklies that we can sell against it. And typically what we've been doing in our class is we've been selling about the 8 days out, because by the time it comes to our class, hopefully it's in a position for us to roll. Okay, so this is where I want you to put on your thought of, we're selling put premium against that long dated option out in August. It's not super long, but it's sort of long. Okay. And some people will feel more comfortable selling out here in, say, the 30 deltas. Some of you might be comfortable in the 40s. We are going to go just a little bit out of the money here. Let's go with our 250, 250. Now, in this case, it's going to be not out the money as much as our hedge leg is, because our hedge leg is at 250. So this one, we're going to have 250, 250, but we're going to bring in 1040 of premium minimum. We're going to go for the midpoint on this. Okay. So we're going to go ahead. We're going to say buy diagonal. And so it starts us out here with our June 5th option, the 250, 250. I think I really wanted 250 here. So let me change this. I clicked on the wrong one. I should have gone by diagonal here with the 250 strike price. Okay, now the system doesn't know what month we want to go to and what strike price we want to use. So we've already determined that we're going to use the 250 for the strike price, but wrong direction. But the period of time we're going to go out is to August. Okay. It just goes and picks the next one that it comes to, but we're going to come out here to August 21. And so initially what we're looking at here, I really wanted them to be different strike prices here. So maybe I will change this up. I'm going to change this one up to be the 250, 250. So I really don't want to submit it as a calendar, but I do want you to recognize that our longer leg is further dated. That's further dated is a little bit further out of the money, which is non-traditional. okay? And we're going to think of this as our put selling mechanism. We'll just go ahead and just do one contract on these, okay? And what is it saying? 252.50 is not traded. Okay, it's going to force us. It's saying we don't have that as an option on our June 5th. We're going to put that back to the 250, okay? Technically, it's a calendar today. It's not going to stay a calendar for very long. All right, we're going to submit this. It takes our debit down to about 1138. And so our idea is we want to sell premium, try to offset that continually, okay? We're going to be in this trade a long time. Our intent is, I should say, to be in the trade a long time. Now, my time is up, so a couple of quick things. I hope you've already become a subscriber to our Trader Talks channel. Some of your comments have been, yeah, we're all subscribers already. So we know about them. But if you're not, if you're new, go ahead, click on that blue subscribe button in the bottom right-hand corner. If this was if this was helpful for you today, I guess it could be happy too. Feel free to hit the thumbs up on the way out. Appreciate y'all being here. Brett, thanks for helping out in the chat here today. Now, coming up next is going to be investing in dividend stocks. Brent, I think it's going to be Brent's going to be leading that discussion here at the top of the hour. I'll be over in the chat, so I will see you there and take care of the remaining questions next week. All right, see ya. Bye-bye.